This is important whether you're investing for a 4-year-old, a 14-year-old, or a 74-year-old. You have to say, what am I going to do when the market goes down? Because I've had audiences like this, larger audiences, and I'll say, how many people in the room are short-term investors? I've never had anybody ever raise their hand. I mean, everybody in the world is a long-term investor until the market goes down. And like in 90, I remember 1990. 1990 was so much scarier than 87. 87, the market just fell down, and you call up companies and said, our business is terrific. We're about to announce a stock buyback, or we're already buying back our stock. Business is great, and we can't figure this out. But in 1990, you had Kuwait invaded. You had the banking system really on the ropes. I mean, really close. You called up a company and they said the business was slowing down. We sent 500,000 troops to Saudi, and we were about to fight what people thought was the, remember this, it was the 4th largest army in the world, and they were the toughest army in the world, and this was going to be a terrible war, and that we ought to sit them out. Remember the theory, the big theory, there's a lot of people in this city saying, we ought to wait them out. You know, we'd still be waiting there at 120 degrees with our 500,000 people. I mean, I think Bush made an incredibly brave decision on the information he was getting to go in there and knock them out, or we'd still be there. But that was an ugly time, and that was very scary. And the public stood up. Some people learned from 87, and they stood throughout that and said, I'm confident about the next 5, 10, 15 years of this country, and they hung in there. So I would say if you want to buy a small growth fund, or you want to buy a balanced fund that's part bonds and part stocks, you put so much money in, put more in every year, you'll be very pleased in 10, 20, 30 years. Stocks will beat the hell out of money markets. They can beat the hell out of bonds. No group of, you think of it, any corporations, McDonald's, any of these great companies, Marriott, you name it, they've never got together and said, geez, you know, we're really doing well. Why don't we raise the coupon on our bonds? You know, those bondholders have been really loyal. We've been given 8%. Why don't we raise it to 9%? But companies like Automatic Data Processing, they do payroll. It's an amazing, prosaic company. 32 years of higher earnings. 32 years of double-digit earnings growth. We've had recessions, we've had wars, we've had changes in Congress, changes in the Supreme Court. 32 years of up earnings. So, I mean, that's what you're relying on. Johnson & Johnson, 30 years of up earnings. I mean, these are General Parts, 42 years of up earnings. Emerson Electric, 38 years of up earnings. You don't see companies like this in other parts of the world. So I think that's what you buy when you buy a fund. You're buying a bunch of good companies. And the second question was what again?
Just your...
the stocks. Well, I think the financial area has been hurt heavily in the stock market. I think that's an attractive area. Stocks like Chemical or Travelers or Citicorp or Bank of Boston or Fleet or Shawmut, Fannie Mae, Freddie Mac. These stocks have all come down. Their business is terrific. They've improved their balance sheets. They're selling at multiples half or 1/3 lower than the general market. I think the cyclicals. I think we have a chance for the cyclicals for the first time in a long time. The steels, the papers, the aluminums, the chemicals. I mean, it's their turn to come to the plate, and there's going to be a good time the next. We seem to have an economy recovering in Latin America. Brazil is turning around. These are facts again. When you hear these facts, these countries are really. India, I've been visited India. Things are really improving in India. Europe had the worst recession since the Depression. There's 18 million people out of work. 18 million people out of work in Western Europe right now. And the economy's starting to slowly turn. Japan has bottomed. So I think you're going to see a demand. And commodity prices have been, aluminum prices got to 30-year low. Now ingot has almost doubled. You're going to see the same thing with linerboard. So you're going to see a very good time for cyclical stocks. And I think the auto stocks are also extremely cheap at 4 or 5 times earnings. I think the economy's going to be, my opinion, from the companies I talk to, in the business I look at, things are not off trend line. These are not extraordinary times. Housing is very affordable. It's not as affordable as it was 2 years ago, but on a 20-year basis, housing is very affordable. Automobiles are very affordable. Consumer durables are very affordable. I think people are going to, and we've added, as you know, I still don't understand when we hear the job growth. We've added, in the recession, we lost 1.8 million jobs, and now we've added back 5.8 million, 4.5 million in the last 19 months. So we lost 1.8, and we've added 5.8 back. We're 4 million to the good. Tough part of it is we dropped about 600,000 manufacturing jobs, and we've only brought back 100,000 manufacturing jobs. but there are a lot more people working, and I think that trend is going to continue. And in the decade of the 80s, I think this is key. The decade of the 80s, this is what you hear from the press, this is what you hear from TV. In the decade of the 80s, the 500 largest companies eliminated 3 million jobs. 3 million jobs. But there was 2.1 million businesses started in the 1980s. And if they just have 10 people each, that's 21 million jobs. It's an incredible job machine we have in America. So that's what happened in the 80s. These 2.1 million businesses created all the jobs. And the decade of the 90s, the top 500 companies are going to eliminate another 3 million people. And all you ever hear about is Company X lays off 5,000 people in Hartford, and Company Y lays off 5,000 people in Rochester, and somebody doesn't buy a sofa in Scottsdale, Arizona, because they're reading their newspaper about another layoff in the Northeast. I mean, that's the nature. These companies have to do it to stay competitive. That's our business. And we've had, in the last 2.5 years, been a phenomenal, this has been a great thing for our country. We've had 1,750 companies come public. They've raised over $100 billion. There's only 2,500 companies in your size change. 1,750 companies is a lot. They're going to put this into research and development. They're going to put it into more plant, more efficient equipment. This is a fantastic thing for these companies. So I think the situation is excellent. The banking system, for the first time since the early 50s, a lot of people have followed the banking industry. The banking system today has more investments on the left side of the balance sheet. You talk about the governments they own, the mortgage-backed securities they own, than they have loans. First time ever since 1951. And they're only making 50, 20, 30 basis points. And they said, love to make loans. The banking system has the highest equity to assets in 45 years. The banking system is ready to go. There's lots of liquidity around. I don't know why people are so depressed about people getting hired all the time. I can't quite figure this out. I don't know. I have never met a banker, anybody in business that likes recessions. I've yet to find these people, you know. So I think it's very good the economy's doing well.